Good morning. Good morning, everyone. I'm Bagadan at Stock Market Caddy, and today is Monday, March 18th. And hope the luck of the Irish were with you this past weekend. Had a great St. Patty's Day weekend. We're right back at it, and we're looking good. Markets are in a nice, swing basis. We are now live on YouTube for about an hour, maybe an hour and 15 minutes or so. We'll take you up into the noon hour, maybe 12:15, 12:30 at most. And then we got a lot we're working on, a lot that we're doing. We're going to try to do this periodically. Be sure to follow on YouTube. It's free. Push the notification button, the like buttons. It helps us. But when we post up, it could be at 10 at night, could be at 8 in the morning. You'll get a notification, and if you're available, you'll get to see what we're looking at. Otherwise, we'll try to do it probably the middle part of the day, either 11 or 12, maybe a Monday, Wednesday, Friday type of deal. And it's just trying to give you an opportunity to see what we're up to, what we're working on, and what robot assisted trading might look like. And not for everybody, but if it is something that interests you, I encourage you to visit the website. Happy to answer questions, but I'd prefer, it's time, your time, our time, that you visit the website first and try to glean as much of it as you can. And then I'm still happy to answer questions. But so don't hesitate. If you are overseas and I understand the cell calls could be expensive. I don't think we're on WhatsApp. I don't think I use that, but we can communicate via email, and if we need to set up a live Zoom link, we can always do that to speak with each other for at least a few minutes. Had a nice conversation with a gentleman, though from England, and we were together for probably about an hour on Saturday. So we'll do what we can to connect with you and give you a chance to ask you questions. And any other questions, feel free to post them in the chat, and I'll try to answer as they might come up. We are off and running. We didn't have any trades overnight. The program was running, but so we're kicking off the beginning balance at 25,000. The program turned on Monday at 8 a.m. This is a program that we've been working on now for some weeks with some variations to it as we learn what is going to be helpful, what isn't. And so we'll try to periodically give you an update during the week as to how we're doing. Right now, all the trades are robot assisted, meaning the machine is putting them in and putting them out, and I'm trying to stay out of the way. Could I go up there and capture the 500 bucks? I could, but I'd rather not. And because I don't know, the machine might go up 2,000, 3,000, 5,000. You never know. Swing machine itself, if we were trading swing machine, if you had gone long last night at 8:45 and stayed with it, had the confidence, had the skill set to be able to stay with that trade, you'd be up $4,000 or $5,000. The challenge always comes in. We understand this. It's money. We're all trained to react to money, maybe not in good ways. And in trading, we need to be reacting to the signals, the technicals, and not reacting to the money. Because if you react to the money, you're trading greed and fear. And if you trade greed and fear, they will get you. Madison Avenue and Wall Street, they're masters at separating folks from their bread. That's how they get to build those big buildings, how they get those homes out in the Hamptons, West Palm, and the rest of them, right? The masters at it. But we're not from Wall Street. Nope. Can't imagine having spent my life there. I spent my life in another endeavor and teaching surgeons how to use some of the most advanced instruments of the day. And now going back maybe, 15 years ago. Little did I, time has gone by. But Susan and I left our earlier careers and set out to control our own destiny, trading our own cash. So we very much trade our own. We don't manage anyone's money. We don't make specific recommendations to buy or sell. What we do is for those folks that are interested, we'll share with you on a nightly basis, daily basis, which is not the Zoom, but the video at night, and share with you the signals that we're looking at and the interpretation that we're seeing. And you can filter that into what you want to do. And for the person who wants to either do this full time, either now or in the very near future, we are prepared to spend 3+ weeks with you and help you better understand who we are, what we're about, what we're trying to do. And we better understand what you're doing, and um, and get you underway. If you want to, at the end of your 3+ weeks, want to become an annual member, then you get everything that we have. You would get Stock Market, the Swing Machine. You would get all the other programs. You would get the very program that we're working on right now. Again, we've been working on this program for a few weeks, so and we don't charge anything more. Once you're a member, you're a member, and that's what we do. Uncle Jur, I can't see. Let me see if I can see your question there. It says, well, quick question. What is dip? Can't, YouTube has got these damn little icons. I don't know how to get rid of them. Let's see if I can get rid of them. So it's got a heart or something there, and I can't, not real swift with this, this chat function. So I'm thinking you're asking, what is dip? Is that what you're asking? Maybe if you put in another line there, I'll be able to see it. Can't seem to see it. I think what Uncle Jur is asking, just give a real quick orientation. And we're not trading Swing Machine right here, right now, but we keep it up and keep a view of everything. We're trading this guy up here as reflected in this account over here. Oh, yeah. So we see shorts and longs, but sometimes it shows dip. Just wondering what the dip is. Yeah, this is the signal column, and we can just call it a trade entry. And it's telling us whether we on the interval. Let's pick one. Let's pick this ES right here on the 1 minute. This is the current price of the futures contract. This is the net change from the open. This is the trade signal. So please don't take any of these trades, right? You're on delay and whatnot. So, but on a 1 minute interval, the Swing Machine has went short 19. What this 19 means, 19 minutes ago, it went short. I'll explain. Okay, it's now saying rip. It's short. There it is. So I'll explain the nuance there. And if you had taken that trade at this price at 11:06, today's date, you get all the trend information, everything over here. You are in fact up. If you used a mini contract, you're up $100. If you use the micro, you're up $10. So you're seeing shorts and you're seeing longs, but you're also seeing rips and dips. And that is the trend. Yeah, thanks, Parker. Is that you, Parker? No, that wasn't you. Oh, okay. No, I didn't think so. Yeah, good to see you. Um, so just to kind of draw it out a little bit for the folks that might be watching and passing by, when you have a trend, let me see if I get a marker. Bear with me a minute. Let me see. I get a drawing marker here. So everyone knows the trend is your friend, right? So this is an uptrend, right? To the moon. That's supposed to be an arrow. So that's an uptrend. What makes it an uptrend? Higher lows. These are the pivot points. Higher lows. So when something is going up, it does pull back. What are those pullbacks? Dips, right? Buy the dip, buy the dip, buy the dip, ideally, right? But when, so away you go. Ideally, person is, if, and the price action isn't this ideal, but in a perfect world, you would want to enter right here, set your stop right here, and get on the trend, and you buy the dip. So now what is the opposite of that? So it is true that when you want to get on a trend, you're buying the dip, but when you're no problem. But when trends are going down, which CNBC will never talk about, they look like this. Right? They look something like that. And that's a downtrend. And nothing goes straight down. They go down faster than they go up. And what are these? When you're coming down and the price goes back up and then comes down and goes back up, what are those? So, and what makes this a downtrend? You've got a lower high, a lower high, lower high, lower high, but they bounce. Those bounces are rips. So over here, they're dips. Down here, they're rips. So of course, everyone has been taught and trained by the dip, by the dip, by the dip. That's great. But when you're in a downtrend, if you buy the dip, you're going to get killed. You're going to give back all the money you made and then some. You want to sell the rips. You sell the rips. That's why folks will come into a market when the market, any market, could be Bitcoin, could be anything, could be Tesla, could be anything. And they make, 20,000, 30,000. And that because the market was going up. They may not have even known they were buying the dip. They may have bought the highs even. But if something is making new high, new high, new high, it doesn't really matter. So they will make, 25 or $30,000. They'll make whatever they make, and then the market they're in, whatever it is, takes a downtrend, and they continue to buy, and see every pullback as a dip, and they get back all the money and then some. Then they quit, go do something else, and say that it's rigged and everything. It is rigged. It is rigged. You just want to stay on the right side of the market. So there's a lot going on here. Now, there's a lot. New to We got a new position. Yeah, I can't begin to, it isn't a red light, green light system. And it takes us actually a couple of days, 2 to 3 days to give an orientation on Swing Machine. So just know that, right? I can't do that on YouTube, and we're not trying to, give out trades here per se, but there is a very much a technique and a skill set to trade this. And it takes practice. It really does. But the other catch to it is, when we look at, let me erase these, just using that little black space up here because we got a kind of a crowded screen this morning. But the other part of it is, so if you get a trend following long or a trend following short, when you're getting on the trend, and the trend could be a 1 minute trend. Trend could be a 5 minute. Trend could be a daily. Trend could be a weekly. You could be a monthly investor and be on a trend for years and years and years, if you know what you're doing. And there's nothing wrong with that. But if you don't know how to identify the trend, how do you know? Maybe it's a dip, or maybe it's the start of a new downtrend? Oh, that wouldn't be so good, right? So you have to know that. So it's very easy to get a case, or if you don't know what you're looking for and skilled to doing it, you can get yourself in a case of vertigo and just get back everything. But I was saying, I signed up for the month. I ain't kidding. Oh, okay, Uncle Jer. Is that are you Joel? But we're watching it on a day-to-day. Uncle Jer? You might be Joel. I don't recognize your YouTube name. Sure. Well, thank you. Joel is some I think it's Joel. Um you have to let me know. And you don't have to, but yeah, okay, good. Good to see you, Joel. Joel had signed up as a monthly. Yeah. So well, good to see you, Joel. Thank you. He signed up in the last week or two, so thank you. So the issue with these trends, trend following long, trend following short, um, they do pay whoops, we'll use green here. They do pay the most amount of money. They do. Oops, I keep using the same dang thing. They pay the most. Oop, not too good there with a free hand. They pay the most amount of money. Those are supposed to be dollar signs. And yeah, Zoom doesn't have dollar signs, but um the other thing is with trends is they are in all right, infrequent. They don't happen all the time, right? They don't. I mean, the monthly trend on the ES started 10 years ago. You're either in it or you're not. And if you don't know how to get in it, you're out. So they're infrequent. The 1 minute is going to, be giving you little trends all day, every single day. 3 minute is going to be less, 5 minutes is going to be less, hours going to be less, daily is going to be less, weekly less, right? So they're infrequent. The other thing about the trends, um, I wanted to say to think about it. And it's always good to do this because it makes me stop and think and slow down. And we don't even think about these things too much anymore unless we're involved in a queue. Let's see. Oh, the win-loss ratio. The win-loss ratio on trends is 30 to 50%. 30 to 50%. And it's important to know that because you person might be saying, well, I'm going to get on the trend. And but they're fighting this win-loss. They need to win all the time. And they cut them off too early, because they want to win. And then when you stop and you think about this, we can have a great trend that loses 7 out of 10 times. Now think about that. I mean, if you put on 10 trades, you mean I could lose 7 out of 10 times? Yeah. Yeah. And still make money if you are getting on good trends. 50% would be excellent. So it's important to know what type of trade you're putting on. Most people don't. They have no idea. They're just putting on money. They have no idea. And so it's important to have an idea of expectation. The dips and the rips are we're going to clear this, are counter trends. Counter trends. And the counter trends, they pay a little bit. And they're very, very seductive and they're frequent. They happen a lot. And if you're a good counter trender, you need to be winning 70 to 80% of the time. Well, that's what I want to do. Is it? That's what most people think, or maybe they want to. It's very seductive because again, they're frequent, but you work very hard for that. You work very hard for it. And your discipline has to be absolutely flawless. Because yes, you win 70 to 80% of the time, but if your execution is not flawless, you will get carried out to sea by what? By the trend. So Swing Machine is identifying that. That's what Swing Machine is doing for you, helping you. Now you could be looking, depending upon what you're looking at, it's gonna, we got paint bars to match it perfectly, and you could be looking at other things too. Now the other part of it is, but it's important to know. And the other part is why? If you don't have a degree of expectation, if you don't know what to expect in anything in life, you're going to have anxiety, and that's not going to be good. You won't do anything well. If I mean, butterflies are one thing, but if you're constantly in a state of anxiety, um, those golfers that won the TPC, are in the top handful. I mean, yeah, they may have had some butterflies and everything, but they were pretty confident in what they were doing, especially the guy who won it, right? The good news is you don't have to compete with me or with anyone, right? The other part is you have to hone this skill set mechanically yourself before running a robot, because um, you don't know what you don't know yet, and you haven't experienced it. And if you plug in the robot and start managing it with your emotions, then you'll destroy it. Whatever it is, you just destroy it, including swing machine. Now, the other piece to this is, let me just clear this. Didn't expect to go here, but that's okay. The market goes up and the market goes down. What percent of the time? About 30% of the time. It's either raging higher or raging lower. 30%. What's it doing the rest of the time? Goes sideways. The little bastards. About 70% of the time, the market just goes sideways. Then what do you do? So you can have little micro trends in between, maybe on the 1 minute, but so let me show you. Let me go to swing machine for a minute. Here's the ES. We're going to put the ES on a daily. Now, Joel just signed up last week. And thank you, Joel. And if Joel had signed up 90 days ago and saw that there was a new trend 87 days ago at 5 p.m. on November 10th, and he placed a mini contract on, and he had the capital, and he put it on, and he's still riding the trend, he'd be up $35,000. But that's not fair entirely, because if Joel doesn't have the trading experience, the trading confidence to put that type of capital at risk and to see the oscillations and not understand, because it's not a straight shot. It didn't go straight up, right? I mean, this thing, would have been oscillating. He would have been reacting to the money, and that would get him in trouble. Now, a person could also, though, reduce. Now, it does say 15%, right? Return, but that's the difference between the entry price and where it's trading now. But this is a leveraged position. So that's why it's, if it was non-leveraged, you would only be up, like if you put $10,000 into the SPY, you'd be up $1,500, right? So, so you have to learn and hone your craft before you start using leverage and maybe too much leverage. But fortunately with futures, if Joel had used a micro contract, which is leveraged, he would have needed about $1,800 to put the trade on. He would have needed at least double, triple of that in the account to comfortably. So he would have had to have about $3,000 or $4,000 in the account to carry it. And he wouldn't be up 3,400, 35,000. He would be up 3,500. So even though it's only up 15%, he'd be up, because it's a leveraged futures contract, he'd be up over 100% as capital. But you have to learn, these trends and help with the expectations so that you can hopefully get control and ahead of your emotions. That's why I don't want to, go up here and intervene and capture the money. I'm not trying to demonstrate an outcome here when we do these things, by the way. I'm not, right? This thing is trading, and we're going to be trading this hopefully all week. So I'm doing my best. I could intervene and capture that money, but I'm not trying to put on a trading clinic here to prove a point or anything. It's not that at all. So here to answer your question. But so when the markets go sideways for 70% of the time, this trend started 87 days ago. Well, Joel just joined last week. I mean, I can't produce a daily trend for him, this week. Sorry, Joel. But maybe. But he knows he's getting an education, and we have tutorials he can watch. If the ES goes short on any given day, Joel's going to see it, the nightly video. Now, there isn't going to be a guarantee that it's going to run up, $35,000 or $40,000 in the next 90 days. The market may do that, may do better. I don't know. We never know. So, and it may stay in, these trends, stubborn little bastards. That's why you want to get in them. They're stubborn, especially on the long side. And they can just last and last and last. And I can't change it. We don't control the market. We just follow it. But so we could go in a sideways action. So what's nice about, when we're trading intraday, we don't have to be too concerned. We're not, we are looking for the next, trend. We'll be watching for it. We were aware of this one when this one went off on November 10th. I mean, we commented, we chatted about it with our members, and I was like, okay. And everyone was really pretty bearish. We were pretty bearish before that. We were, I was like, well, son of a gun, they're going long. I'm like, huh. And then I speculated a little bit from some previous experience. I'm thinking, you know what? It's the end of October, November. A lot of times the market's bottom. You know what? These bastards might run us into December. That's what we said. Now, I never thought, I never do. I never thought we would still be in the same trend going into March. I don't know. I mean, we might still be here in June. So you never really know. But we trade, where we're active traders, we can drop down and we can get inside the daily, right? And get done what we need to get done. Does that make a little bit of sense? When you have a sideways market, if you can't, depending on what the interval is, and we're just talking generically here, then what you have to do is you do need to trade, maybe counter trade from point to point to point, right? Now there's another part to this that is real insidious about this, right? And about these trends. And I'm happy to answer any question on this if this makes sense. But every trend long and every trend short starts with a counter trend. But not every counter trend becomes a trend. So our members get sick of me hearing me, but I'll explain it for those that haven't. This is the metaphor. Every hurricane that hits Florida, I hope we don't have any next season, starts with a little butterfly in the Sahara Desert that bent over and farted, kicks up a little bit of dust, and it becomes a thunderstorm, and then it becomes a bigger storm, and then off the Cape Verdes, and then comes across the ocean and becomes a hurricane and comes in and wreaks havoc with us. Every single hurricane that hits Florida starts with a butterfly fart. Every single one. But not every butterfly fart, and not every hurricane that does become a hurricane in the Atlantic Basin hit us. Sometimes they go the other way. Sometimes they just go out to sea. Sometimes they just become low pressures or thunderstorms. But not every butterfly fart even becomes um, a thunderstorm. Not every one. Trends are hurricanes. Counter trends are butterfly farts, right? They're small. And what happens is somebody starts out trading. They sit down at their desk and they got the flat screen TV and they got 10 monitors and they're ready to go live and they're got a book on Steve Neeson candles and they just gotta go at it. They got CNBC on and they put on a trade. It's a counter trade. They think it's hit the top. And suddenly, the market does in fact fall apart and it becomes a downtrend and they make a ton of money. Then they get imprinted. That memory gets imprinted on them. And now they become addicted to counter trending and they don't understand why they're not making the thousands that one counter trend that became a trend paid them out. They don't understand that because they never went through and got schooled and got practiced to understand. And then it becomes more difficult. Talking to a very nice gentleman on Saturday, a little unusual. Um, I told him this, so if he's listening, I hopefully he's on vacation or working, but because he said, Don, I've been listening and watching, and he said, I'm thinking of doing this. He said, but before I start, buying and selling and buying, I think I want to get an education, and I'm real intrigued with some of the things that you're doing. That's kind of unusual. It's not usually the case. Sometimes, or many times, there'll be folks that, have lost a lot of money, and now want to get the education. Get it up front. It doesn't have to be from us, please. Please. It can be a very painful endeavor. I don't want you to have that pain. We bend over backwards to spend a lot of time with everybody, and we can't keep you from having losses. Losing money, losing money is sadly the best learning experience for all. Well, it can be painful. You can't, you know, well, just that, and Park is one of our members. You can't win on every single trade. Not possible. And Park is saying he's not. So Park is one of our members, and I'll just show you the little. No, his full name's there, so I'm going to keep his privacy. But let me scroll it down. But he's saying improper size makes it painful. Yeah, but when you over leverage, and so we you as a trader, you're going to have losses. As a golfer, competitive golfer, you're going to have bad shots. Not every shot is, unless you're, Rory or somebody or Scheffler, you're not going to hit every shot flush for 4 days, straight every week in, week out. They can't even do that. So you want to aim small, miss small. We're stealing that from one of our members who's a professional golfer. Aim small, miss small, and we don't want to have any negative outliers. Zero. We do want positive outliers. That's where you have to just kind of sit on your hands, sit on your emotions. It's very tempting, because yeah, if you had put on 10 minis, if I had put on 10 minis here, I'd be 340,000. And then we can come in here to the NQ. It's going to be even more painful for you to see this. Watch. Oops, I put the daily here. I'm sorry. I'll put it. Let me put that back to a 3 minute. I'll pick the right one. So we can change the intervals, right? We don't routinely. We got different screens to see what we need to see. But so here's the daily view. So it was 90 days ago. It's $50,000. Well, I want that. Of course you do. Everybody does. But if you put it on and you were up $5,000 and you weren't equipped, you may have just taken it off. Now what are you going to do? Or maybe when it first went on, maybe there was a drawdown of 5,000. I don't know. We could go back and look, and you puked out because you was too much. Now what's even more painful is not understanding the trends and not understanding what you're doing. And you got to be careful with this, right? Because what if you buy the dip, what you think is the dip, and it's not the dip, it's actually a rip, and you hold on to it and hold on to it and hold on to it, then you get killed. So, there are different things, just like in golf. They teach you, or I've been taught, and I'm not a pro at golf, but it's easy, right? You just go to the tee box and aim toward the pin and hit away. Well, not exactly. You can't hit it with one shot. You got to have 3 or 4 shots, maybe 5, if you're playing well. And you want to hit away from trouble. Don't hit into trouble. So you don't stand up at the tee, every tee with your driver. Maybe, one hole, maybe you're going to hit a 3-wood or a 5-wood, or maybe it's going to be a 3-iron. So you don't come into every trade, with 10 mini contracts on. I'm going to come in on the 1 minute. I'm going to put 10 minis on. Probably, so makes sense a little bit. So now, just to show you, so we can take the NQ. We'll stay with the ES, and let's put this on a monthly. Okay. The monthly may not be calculating because I may not have enough bars back on this one here. But I also may need the ES contract or the continuous contract. Yeah, there it is. The ESM is the June contract. So I go to the continuous contract so it can pick it up, so the machine can pick up. This was back in 2010. It was 14 years ago. So you're like, Don, I want to be a monthly investor. All right, well, you better have some time. You better be a young guy, because that trend started, back in 2010. Would you have stayed with it? Now, there have been some dips on the monthly, and they would have been sizable, and it would have challenged your thought process, right? You definitely would have been challenged. You would have had to hold through COVID and all this stuff, right? But if you had it had the firepower, which would have been, you would have had to have had comfortably in your account. You wouldn't have even had to have $30,000 in your account. When this thing started, the contracts weren't 18,000. They're not during the day, they're not 18,000, but to hold it overnight, you would have had to have about 30 to 40,000 or so comfortable, but you would be up 200,000 if you had just one of them. And then the NQ, we got to do the same thing. We got to use the continuous contract here. And let's put this on a monthly. Did I screw it up? On a monthly, it's going to go back to 2010. 300,000. Now, one day, 1 month, that trend is going to die. And how it's going to happen, it's going to go into a dip. And, some folks are going to shake out. Some may have shaken out, years ago, and then never got back in. But someday it's going to dip, and it's going to keep dipping. And then it's going to go into a downtrend. And someone's going to come in and say, oh, I'm buying it now. I didn't buy it in 2010. I'm buying it now. And it's going to be in a downtrend and take all your bread away. Don, what would be the reason? This is Joel. Joel, I'm going to call you Joel if that's okay. Uncle Jerry. Uncle Jerry sounds. And Joel, what would be the reason to not let the SMC operate live all the time frames and products that we can see on the radar right now? Too much exposure. Why only trade one in Q? No problem at all. Yeah, no, we focus on the NQ because it's the most leveraged market. It's the most popular market. It's the crazy aunt in the basement, and everyone loves to trade the NQ. So, and that's why we put it up here. But you can use, Swing Machine for stocks and ETFs, and you don't have to use this kind of leverage. We'll put this back too, by the way. So no problem at all. So that's, so when we're doing this, but we do trade it, right, ourselves quite a bit, and I have the Dow, and I almost never trade the Dow. So that's all. It's just popular. ESM 24. And then we'll just put this back. And then where we're trading intraday, right? So then that's why we use the smaller time frames. But this isn't the only setup, right? We have members that may choose to use different intervals and then also entirely different tools, not just a Swing Machine. You need to use other tools. So thanks for the question. Trends important. And again, it goes with setting expectations. So it isn't just, it isn't a red light and green light. If there's anything else, let me know. Now, the other piece too, just to show, you can do this with stocks, right? So let's just pick like NVIDIA, right? We'll pick on NVIDIA because it's been the big one, right? So, all right. So it happens to be on a 5-minute. Now we don't trade NVIDIA on a 5-minute basis. Why wouldn't we do that? Why wouldn't we trade NVIDIA intraday? Any idea? It's a little bit of a delay, so let you guys think about it. And there's a lot of people trading stocks intraday. Okay, so I'll go ahead and answer it. The reason we don't, if I trade NVIDIA intraday and I trade stocks intraday, here in the States, you must have and must maintain a minimum of $25,000. Borrow cost to short stocks in Canada is too high. Well, that could be, I don't know. So here in the States too, the regulations are such because they really don't want you doing it. And so you got to have what they'll tag you as what they call a pattern day trader. Now we have the capital; it's not really a big issue, but that's one of the reasons. But if I traded 100 shares of Nvidia, if I shorted the 100 shares on this signal, I would have used how much money? I'd have to have $88,000. Okay, to pick up the 1%. Now it would have generated, I mean, at this was today, it would have generated, $7 or $8, but I would have used $88,000 to make 800. Here I'm using $1,800 to make 300. I mean, just more efficient use of capital. And I don't have all the bullshit rules. So the futures are highly liquid. And it's only showing $7 here. I'd have to go into Swing Machine and we could, but we use much less capital. Now, if I wanted to trade NVIDIA, now let's look at NVIDIA, for instance, on a daily basis. Let's say that you were a member, Joel, 92 days ago, and you saw NVIDIA go long. Right now, you got to set it up, right? If it's on your machine, right? When there are hundreds and hundreds of stocks, we try to show them, a good view every night. But if you have this stuff on your machine, you can set this up to alert yourself. We don't build the alerts, we let you build them. I hope your answer isn't volume. No, no. Yeah, no, we don't. No, it isn't volume. It's all about capital, just efficient use of capital. You'd be using way too much money. So, but let's say that you got long at $457 back on November 6th, about the time the market was taken off. Right. And they certainly carried the market. And every market, every little 3 or 4 month bull run that we have within bull runs, there'll be certain stocks that are leading. They're trying to look for another market, some more pixie dust. Now they're starting to talk about the pod stocks, right? You remember the movie, with Matt McConaughey, boom, boom, he's pounding his chest, and the parade comes to town and the pixie dust. It's pixie dust. It's AI, it's the pot stocks, it's, social media stocks. It's a scam. So, but 91 days ago, if you bought 100 shares of NVIDIA at 424, that would cost you $42,000. Okay, if you got the cash, you got 42 grand. You would be up 92%. And it's gonna, but your account's gonna oscillate back and forth. But we want to give you the tools, we want to give you the education to use the tools so that you're not doing what most people are doing. I hear this, I know this, right? People, they have no idea what this is, right? So they buy something, they call their broker, once or twice a month. Hey, buy me NVIDIA. And then they check on their phone. They call, I don't even want to say the firm. They call somebody, their brokerage account, and I was like, okay, oh, it's up. Hey, I'm having a good day. Oh, it's down. I'm having a bad day. Oh man, it's really going down. Oh wow, it's really going. I better get out of it. They're flying blind, and it's going to be awful, right? It's really going to be awful. You know, that trade's on up there. The machine's got control of it. I'm not pointing to a chart. I got visibility on it. There's no point in me going and showing, and it just isn't. We're doing just fine. But does that make sense? AMD, same thing. Now, I guess where I was going with this, there's a number of different ways to trade NVIDIA, though. What if you don't want to, it's not a futures contract, so you can't trade it with futures. You don't have the 44 grand, but you could use options. So options are leveraged, and you can go long and you can go short, and you can hedge within options, but most people don't want to learn. And all they want to do is buy calls or buy puts. Now, if you bought a call and you bought enough time, you have to buy time. Options are impacted by direction, by duration, and implied volatility and time, I think, right? The three. But most just want to buy calls and buy puts, and they don't want to buy them like for 3 or 4 days because they're really cheap, and it's like mad money, and they're not gonna perform. But there are other things that you can do. We really like to use options. We don't show the option work during the day because we're not doing them. We will do 0 DTEs. We've been doing them for years. They didn't really call them that, but but our preference is to do them 35 to 45 days out. Digital currency, yeah, yep. And I'll show you. Makun, Makun. You have to also let me know what part of the world you guys are from too. You got different rules, and I don't know all the rules and regs. But so option traders, are very familiar with with hedging. So the point being is, though, what we're big into is being diversified in what you can do, not diversified in what you own, but be diversified in understanding the markets. I can buy stock, I can sell stock, make money up and down. That's number one. What is the difference between, the NASDAQ stocks, a dividend stock, um, then the futures markets? What are the futures markets? The options market. What is the options? What is available to me? And understanding how those things work. And the challenge there, unfortunately, for the options is that they take long. It's actually a good thing. They take longer to play out. And you can do things with options and put time on your side. Everyone shies away a lot of times from options because they're like, well, the time decays and I get eaten up. Yeah, but not if you sell credit spreads. You put time on your side, and there are things that you can do. But the challenge is, and this is okay, it's totally okay. This isn't meant for everybody. We had a gentleman, he was out in Northern California, nice guy, working really, really hard, got a job working, tons of hours. He's like, Don, I'd love to go through that Q school with you. I'd really love to do it, but I don't have the time. I'm like, well, we just got to spend about an hour together a day. But Don, I don't even have that time. Okay, you don't have the time. I can't, you know, we can't infuse you. It takes a lot of time. And one thing about the Q school is um, we can at least hopefully get you headed in the right direction, and then your education isn't going to stop. Our members are here; they're listening on Zoom. Um, they're working at this all the time, but they want to do it. So MG, I just call it MG. MG is asking, what about digital currencies? Well, I'm glad you asked. I think what you're talking about is crypto, right? Now, this is set up for, let's get rid of NVIDIA. And by the way, if you want me to plug in any stock, in fact, I'll show you all the stocks in a moment, but I'll plug in anything. But let's put this back to ESM24. I'll show you some more. I got other tabs down below. Let's go look at Bitcoin. It's here. You ready? All right, so here's the Bitcoin futures contract. Bitcoin is trading for $67,715 a coin. It went long. Now, this Bitcoin futures contract is a mini contract. It reflects a futures contract controlling five Bitcoins. So it's a big contract. You also have micro futures contracts, right? But what you're interested in, I think what you want to know is what is radar, what is Swing Machine Plus on this radar telling us? Bitcoin on a daily interval went long 35 days ago. It went long at 44,205 a coin at 5 p.m. on January 29th, and the trend is up. And we could read into more of it. Now, if you had that capital, yeah, you're up 53%. You took the coin from 44 to 67, that's 53%. But this is leverage, so you'd have made 117 grand. Ethereum went long 100 days ago, at 1928. It's now trading at 35.41. So it's up, the signal is up 83%. This is a leverage futures contract, so you're up 80 grand. Now, I had the conversation with a gentleman on Saturday about this, and this is the thing. I don't have an investment opinion or thesis on anything. Thank God, right? So, if you want me to tell you a story about Bitcoin and it's going to $1 million a coin, That I'm not going to do that. It might be going to 0 too. I don't know. All I would say is whatever you do, whatever you buy, and if it's going to be a long-term holding, it could be even a house for that matter, but if it's going to be, gold or silver or the S&P or Bitcoin or Ethereum or some other coin, and you're putting everything you have into that one thing, I think that you should learn how to hedge the position so that you don't blow yourself up and don't have overstress. So how would that have worked? Let's say, let's say, you know, I have a neighbor. I have a neighbor who flies a Bitcoin flag in front of his house. Huge house. Probably put my house in his. It's huge. And he doesn't have a US flag, he's got a Bitcoin flag. I get it. I know it. I don't know if any of my other neighbors know it, and so he's probably got, I don't know, maybe he's got millions of dollars. He probably does. It's a huge house in Bitcoin. And maybe he got it a long time ago. Who knows? But if Bitcoin comes back and goes short here, he's going to suffer a drawdown in the value of his Bitcoin if he does nothing. He doesn't want to, I'm sure he doesn't want to, I don't know this guy, but so I shouldn't, but it would be just somebody generic, doesn't want to sell his Bitcoin. So what that person could do is hodl the Bitcoin, hold on to it, come into the futures market when it goes short and short at least a portion of the value of the Bitcoin that you own. So that when it falls down, and it will fall down, everything falls down at some point, everything, then you maintain the value and you maintain ownership. And then when the resume runs again, you kill the hedge. Now you might lose a little bit of money on the hedge. We're not trying to make money on the hedge. We're trying to smooth out the volatility in our account so that we can hold on to something for the longer term. Now, this is all relative, right? You could be doing this over years or months or whatever it is you're doing, or we can actually get the machine to do this sort of trading in even intraday. Hopefully that makes sense. But you can't start, I mean, I shouldn't say you can't. You can, but again, it starts with an education. You have to kind of start out small steps. Thanks, Parker. Yeah. In the futures markets are beautiful because we don't have to deal with any of the Greeks. They're very liquid. They're leveraged. It's very simple. We move in, we move out, you know. They're tax friendly, they're regulation friendly. They're beautiful. And only 10%, less than 10% of Americans have ever bought or sold. Beautiful, Parker. So I wanted to show everybody before we got to go. Let's give you think, "Well, I bet you this guy's cherry picking." I'm not, right? So let me put this back to 3. So let me show you something that we've been trying to show everybody. So everybody, you might be a stock trader. Yeah. All right, so we're gonna go to the S&P 500. Let's see if this is gonna, now I got those dressed up with Zoom. So let's see if we can. All right, so it's not too bad. All right, so this is another swing machine, and it's blue because it's monitoring the stocks. All right, so just ignore some of the writing. So here's the S&P 500 stocks right here on the left. Here's the daily. It's a daily interval. Here's the last price. Here's the net change. Here's the signals. Here's the number of days that the signals have been in, long and short. Now, the profit and loss is not leveraged, and we went into the the settings here on our tool. This is our tool. We went in and we turned off futures. We turned on stocks and we put in a $10,000 value, right? Is that 10? Yeah, $10,000. But you could put in 1,000. You could put in 100,000. So it's got to have something to calculate the purse. But the percent return on stocks on a daily is, gives us, it's not how we really keep score, but our trading score, but it gives you a benchmark that is objective and consistent. The entry price, the entry date, this is the trend information. Once you know how to identify it's, so that's why we explain that. We understand that. And then this is the fair gauge, and there's even more over here. So there's quite a bit on the screen. So what you want to know is, okay, if I'm going to sort, I'm going to sort this column. All right, and I'm going to show you all 500. So take out, this is the label row, number 1, here's NVIDIA. So Swing Machine's top pick was 91 days ago, NVIDIA, it's up 93%. Here's something here, NRG, 92%, AMD, 71, Ralph Lauren, 58, Meta, Facebook, 58. So here's the trend information. Here's the number of days, and here's the percentage return. Now, I don't have a crack research team, right? I don't have a bunch of unemployed stockbrokers, sitting in the back room and looking real smart, and I'm not yelling and screaming at you and talking inflation and impressing you with my education, which I'm being facetious because I know some of these people are, right? You do too on the Twitter sphere. It's gross. All right, so we're going to come down and we're going to come down. So pay attention to this column, right? So this is the percentage return and then the number, how many stocks. I'm going to show you all 500. Now, here's the first red one. This doesn't mean it's losing money. It means that it's short. It's Humana. Kind of weird. I don't know what's wrong with Humana, but 74 days ago, Swing Machine said you want to sell Humana. Now, if you shorted it, you'd be up 28%, but maybe you don't want to short. Maybe you owned Humana. If you sold it, then you saved yourself your account a 28% haircut. I don't know how low Humana is going. I don't know. Maybe it's going to 50. I don't know. Or maybe you used options to protect that profit, right? You can use options to insure your account, just like you insure your house. People insure their homes and their cars, but don't insure their portfolios because they don't know when. But this is a win tool. So down we come. Now this one here is going to catch your interest. This is Tesla. I like Tesla. I like Musk, but Swing Machine doesn't like his stock. It went short 48 days ago at 234. Now the position is up 26%. If you had used option, now if you did 100 or $10,000, you'd be up, 2,600. If you did more, but if you used options, you could have made even more money, right? Because it's leveraged, just like a futures account, a little different, but leveraged. So now I'm going to scroll down here. We can't take too much more time. I don't want to keep you, but we come down. It's green, green. Watch that this column, the percent return column, right? Let me get this. Oh, trying to widen it out here. I'm trying. Why isn't it doing it? Oh, no. Let's see. There it is. I gotta just address this up a little bit, widen it out so you can see it. Okay. So it's this column that we're interested in. And so we'll scroll down and down, down, down we come. It's still green, 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 long and short, but green, 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 green. Some of it's only 1 or 2%. They may only be 7 or 8 days old, but they've generated some profits. And there we go. All right. So out of 423 stocks, we got to take out the label row. Swing Machine is profitable in 423 of the 500. And I don't have a crack research team. Now the yellow ones mean that he's flat. He's flat, or they could be going in. I don't know why this one is stuck there. I'm not sure what that's about, why that should be there. I'll have to look at that. I don't know. That one should be up here. I don't know why that one's not sorting. So, but down we come. And then, so out of 500 stocks, 438 are either profitable or flat. And then, yes, we do have drawdowns. He does get trades wrong. So this isn't, I don't want you to think like he gets every single trade, but see, his worst trade is 5%. So he doesn't get them all right. There is not a Bible code to the market. We have not cornered the market. This is not automatic. It isn't, because the sleight of hand that Swing Machine is doing is he's kicking them out. Okay. He won't stay wrong for long. All right. He won't hold on to a bad trade. He will kick it out. Humans will hold on to him. They eat like a bird and they shit like an elephant. So what happens is they get into NVIDIA, they make a couple of $1,000 and then they get out and they don't let it run. Should let it run and just let that sucker run until at minimum it goes into a short mode, or you can protect it when it goes into a dip. Depends upon, you got to define before you do this. But then what they'll do is they'll buy Tesla, or even let's pull up, we can get Apple, but they'll make an emotional bet on the trade and it's in a downtrend, and then they're stubborn and they don't want to come out and they stay in it and they lose a ton of money and they get disillusioned. So here is the NASDAQ. No. Where's the NASDAQ? I thought I had it. Here's the NASDAQ. Here's the NASDAQ 100, and same thing. This is the NASDAQ 100, and this is a CrowdStrike, Nancy Pelosi's company, right? 94% doing better than NVIDIA. And down we come. Out of 100 stocks, Swing Machine is profitable in 83, 82. These are flat. And then these are losers, down 3%. But you might even want, a lot of times I'll go to his losers because I'm waiting for them to get going long, or I can get a better price. So like ADI, he went long 12 days ago, but he's suffering a drawdown. But maybe I want to go get that one because I can get a better price than Swing Machine. And then we can sort. Let's go get Apple. So Apple went short 25 days ago. If you shorted it with 100 shares, $10,000, you'd be up 6.27%. If you didn't short it and you just got out of your long, then you saved yourself the value, or maybe you got a put option and you saved yourself the value there too. What's Tesla also? Did we do Tesla? So we can get Tesla here. Here's Tesla. Tesla's down. It's short. It's up 26%. But Tesla, Tesla, well, she's already bounced a little bit. She was in panic. I wouldn't be buying it now. I'd wait for it to buy it, maybe in panic as a counter trade. So we've been chatting for almost an hour and I haven't shown you a single chart. A lot of people are making mistakes. And I see it, especially option traders. You're spending too much time on the charts and not enough time on the math, and not enough time on learning the tools and the basics. And these tools will help you cull out the opportunities. And then if you want to go look at a chart, if you understand the chart you're using, then yeah, I want to see Tesla in panic, Parker. Again, I want to get real picky. I'd want to see it in panic. And then we even have a tool that will help you choose what type of options you might want to use as well. I wouldn't want to be shorting Tesla though down in here even now, right? So, all right, so we've been rambling on here, but all good questions, and we started with trends, right? So it's but if you have any other questions for us, don't hesitate while we're here. And then keeping score, if you've seen some of our videos, I probably won't go there. I've probably talked too much, but we don't keep score by the money. We keep score by the profit factor. You got to get, you know, um, focused, on the handicap. That keeps everything honest. And in the win-loss ratio, the percentage return, it's a benchmark for the stock positions. I get that, um, but the percentage returns really don't tell us a whole much. The win-loss ratio doesn't tell us a whole lot. So there's a guy online, he's got hundreds of thousands of followers. He's got a crack research team. I think he went to Yale, an Ivy Leaguer, and he berates everybody, and they're the smartest of the group, and talks down tier, and he's got a special quad program, quad this, quad that. Um, and he promotes, oh, we got a 90% win rate. Um, that doesn't tell me anything. It's doesn't matter, because you can have 9 wins in a row and then, blow up on the 10th one. But and there are things that well, it's just not relevant. You know, and bullshit the fans, but not the players. We do this day in and day out, like I say. So um we welcome you to visit the site, and we invite you to ask any of your questions. You can email, you're welcome to call. We don't, like I say, we don't make specific recommendations. We don't manage money. Um, we try to provide you the education. We try to save you some time. We're prepared to stay with you for 3 weeks. We don't have a problem. You want to challenge us, intellectually during the time, different things that aren't quite right in your mind or our minds. We're open to learning. And we've had a number of members come in and do outstanding, much, much better than us. It isn't a zero-sum game. So it's just totally fine. And we're basically just kind of a small private club of sorts. That's really what we are. And we're constantly working and constantly trying to develop new views, new approaches. But if you're doing the same old thing, if you get whatever it is you're doing, if you're getting it done, keep doing it. We say that all the time, whether it's our stuff or whatever it is you're doing, just keep doing it. Don't change, just keep doing it. But if you're not getting it, the result you want, um, then you might want to just stop, think. Don't have to, I'm not saying you have to come to us. I may or may not be a good fit, but I would look at the education, and it's just like everything. Like flying a plane, and you might be able to afford to buy a plane. It might have great equipment. You go skimpy on the education. It's a hazy day, late summer, August. Honey, girlfriends, let's jump out of let's go up to Peterborough, get on a small plane and fly out to the vineyard, and get over the Atlantic Ocean in the summertime. JFK and Jackie Bissett. What a horror show, right? He was in a high performance airplane. He was over his skill set. Just an opinion. I'm not a pilot, but um, and got himself in trouble. We don't want to see that happen. Don't get yourself in trouble. Don't get. You know it to be the case in anything you do. These endeavors, flying a plane, scuba diving, parachuting, you make mistake. You may not kill yourself here, hopefully, God knows, but you could do some financial damage. And it's painful. It's painful. And I don't want to see you go through that pain. And that's why Stock Market Caddy, we get all kinds of suggestions, Don, you should do this and you should do that. And you'd have a whole lot more members and you'd have that. Yeah. And that's would be the case. That this certainly would be the case. But Susan feels exactly the same way. We know what would happen. It wouldn't, people would get hurt. They would get hurt. What's this? Oh, it's a good potential buyer. Ooh, wow. I'll have to check that too. Wow. You don't see. Feel free to reach out, Parker. Anything that you need from me, you let me know. All right. It is 12:30 and we've got to break away. Machine is still running. We started this morning at 25. We're at 26.2, and we're just gonna let her keep running. Swing machine is doing its thing here. And any questions we can have. Thank you, Parker. And Parker, if you need anything from me, I'm not sure I understood what happened there. Yeah, sure. Sure. I hope you have loaded in the new email or the new radar, what has the percent return. You did, yeah. Sure. All righty, man. All right. Thank you, folks on the YouTube that came by. If there's any other questions, I'll wait about five or six. I'll wait a few minutes because we're on delay, and then we'll need to sign down. I guess what I was going to say is we slow the whole process down. We're trying to give everybody an opportunity to say no, basically, no, this isn't for us. This isn't for me. One of which is the Q School. Now we know if we didn't do the Q School, we'd have a lot more members, but um, it's just a necessary step. We need to give you that view. We need to slow it down, and we're prepared to spend, three weeks with you. So no rush on our end. We're here every day doing what we got to do, and we would rather do that than not. It's just that we can only, because we're small, we can only do so many folks a year, and we can schedule for, further out in advance. So don't assume that, on a given day, it's not, we're not huge, and we can, get it scheduled. It is first come, first serve. We won't do more than two simultaneously. It's one-on-one, but most is two in one day. Or as we go, we don't overlap. We don't do like five. We don't do classrooms or anything like that. Um, and you see these other things. I don't know how you can do that. I mean, I see these seminars or whatever, and they got hundreds of people. I don't, I don't see how you can get much value out of that. So, all right. Any other questions? You let us know. Otherwise, we're going to be signing off YouTube here in about 1 minute. Thanks. Thanks, Parker.